Hello and welcome to Pro Trader Strategies Market Commentary for Monday, August the 20th. My name's Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't even know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having all that out of the way, let's get it on with some economic data. It being a Monday, there's not a whole lot to talk about, to be quite honest, in the United States or across the pond. But here in the United States, we do have Bostic speaking, and he might be able to stir up the pot a little bit, talk about what the bonds are doing right now, which we will hear in a minute, but the bonds continue to rally despite conventional wisdom, and we'll talk about that, like I said, here in a minute. Later on this week, we do get some better economic data coming out. We do have core retail sales and things of that nature, existing home sales, crude oil inventories, and some flash PMI numbers coming out of Europe. So that should help us with our economic outlook, I should say, with these data points coming out, and that will give us an idea as to the market direction going forward. Having said that, we don't have anything to really go on other than rumors and news. Let's talk about the charts here. We've got crude oil pretty much unchanged right there at the point of control, which is where I've talked about. Right between 60 and 70 is where this is going to want to kind of land, at least for the foreseeable future, I believe. We've got the 200-day moving average right lockstep with the point of control where the most volume has been spent, or actually most time has been spent. So right in this area, it's a pretty wide swath that the market is going to want to hang out around. And this is kind of where I think the sweet spot is right now for crude. So I'm not going to be adding anything recently or anytime in the near future that I can see. But with gold, I've been waiting for an opportunity. This slide has been just unabated to the downside after Putin got done buying. And we have slid over 200 points to the downside since he did that, almost 150, let's call it. Closer to 200. Yeah, 200, let's call it, for the most part. No, 150, final answer. Sorry, math going a little bit tough for me today. And we found that support. I talked about that with the big doji we found when it went down to 116 here. That's where we found support. Market rallied back above the 23 Fibonacci level. So we pushed out some of the weak hands from that 2000 handle. It looks like we want to migrate back up into that, I believe. So I've added a trade for that. We'll talk about that here in a minute when I talk about my trades in GLD. Let's talk about the rest of the markets again with Bitcoin. Pretty quiet right now. It is really building a nice base here where volume is being transacted. Although it is at very small increments on a daily basis, it will overall affect that point of control where it says time and volume is being accepted. So Bitcoin down here around 6,000, much lower. These guys cannot, I think it's right around 5,000 now where they have to be in order to produce a Bitcoin. It costs that much energy to produce one Bitcoin right now. So anything below that, the miners are losing money. Anything above that, it's make or break time. We have the bonds moving higher. This is it's really a flight to safety on the global aspect. It's, where do you park your money other than in U.S. Treasuries where they are backed? So that is really a product of this market moving higher, is global investment for the most part, despite the fact that interest rates look like they are going to continue higher. All right, now VIX unchanged for the most part. We aren't in the teens necessarily. We are in double digits. I'd like to get it up into the teens again. That being said, The reason why we aren't really seeing a lot of move in the VIX is because we got a mixed bag in the equities, with the Dow Jones Industrial Average up almost 100 points, popping above the 38 Fibonacci extension and the value area highs. We had a little bit of a tweezer top going on here right at the 38 Fibonacci extension. Today we were able to pop above that on the open, and bulls obviously want that to stay above. That creates that higher highs, higher lows scenario, which is a bullish trend, which is obviously what a bull in the equities would want to see. NASDAQ, a little bit of a lagger right here today anyway, being down 12 points on the day. 12 points can be made up in a matter of seconds, but the 61 Fibonacci is the counterpart to what we were just talking about in the Dow Jones. Obviously, bulls want that to settle up and above there in order to continue that bullish rally. Right now, that 61 Fibonacci is acting as a resistance area. So having a little bit of trouble today getting through there. E-mini S&Ps up on the day. This is what I was talking about, mixed bag. The NASDAQ down, E-mini S&Ps down, up on the day. NASDAQ can make that up in a matter of seconds, to be quite honest, but it is still considered a mixed bag in my eyes when you got a couple of them down. And E-mini S&Ps pushing higher, but not quite breaching this high here, which is going to be that continuation, higher highs, higher lows scenario we've been talking about. Right now, pretty quiet, but that's because we haven't seen the economic data. Overnight inventory, as you can see, we open up, popped higher, flushed those boys out coming into the day session, and then rallied. That's pretty healthy. That's what we usually have a tendency to see. That being said, though, not a whole lot of conviction to directionality at this point. So today, kind of a quiet day as a Monday would go. All right, talking about GLD related to gold futures. I feel that it's found a little bit of a bottom, so I decided to go into GLD confirmation on Friday to the upside. Today it's continuing, trying to cover this little gap here we've seen in the ETF. That's because it doesn't trade in the overnight session, whereas /GC does trade, and it will have those gaps a little bit more filled in. But it's nice to see the day session gaps because markets want to fill in those gaps, and I think that that's what we're starting to see here. And that gap could want to be covered all the way back up to the 114, 115 handle. That would completely cover those gaps there. So nice little move to the upside, cover those gaps, and then at that point I don't care which direction we go because I'll be out and long gone by then. So in GLD I decided to go in below where the bottom is here. You can see implied volatility high but starting to come out. That's the scenario we want. Expectation of volatility coming out of these when we are selling premium. And I went into the September and sold the 110 puts in there for 58 cents. Tried to do it over in my IRA, trying to make it for about 54 cents. Trying to buy that one for a nickel or less. I missed that opportunity, at least as of right now, so I've just got a working order in my IRA. Right now it's just in my margin account. Jumped on that early. So sold that one. Volatility comes out, get a directional pop to the upside. Should be able to get out of that one relatively soon. And then in Tesla, after Elon lied to the public and probably broke a lot of trust even with some of his major followers and champions, market has come down. We are at 100% implied volatility percent for Tesla. Doesn't mean that it can't go higher, you guys, but with this type of move, we got really high implied volatility. It's the time for me to start selling premium because we are able to get really far away from where the underlying is trading in order to do this. So I decided to go in and get above even the all-time high in Tesla and sold the September 390 calls in there for $1.47. Didn't do that in my margin account. It wasn't working out. But that being said, in Tesla, obviously I am bearish in Tesla. Still have those 2-year puts on. Think it's going to roll over, but I got to take advantage of high implied volatility, and that's the beauty in high implied volatility is it allows me to get up here above the high and try and take advantage of that. Obviously, we got the tweezer tops here. That's going to be a very big point of contention. Some people might be saying, yeah, but Elon's saying 420 is where it's going to go out. Listen, he pulled that number out of his hat and probably has no real credence to it. So I'm picking above where the tweezers are for this trade here. And that's about it. A couple of trades that I've added. We're winding down on earnings season. We do still have like Target, Alibaba, Lowe's, I think is coming out this week as well. So we still have a couple of opportunities. I'm not trying to fill up all my margin right now, but I want to take advantage of those. Those are a couple that I want to trade later on this week. So keep your eyes out for that. Nothing I'm going to be trading though tonight other than what I've already put on, okay? And if you can't take that, take it easy.